Hello everyone, this is Kishore. Welcome back to my channel. Today I'd like to go over major market indices analysis, pension fund index and rebalancing in September, seasonality chart, huge darkpool prints on SPY and QQQ, COT index and futures, option flow and GEX level for major market indices, crude and dollar price chart analysis. This is not a financial advice, just for knowledge purpose only. Let's jump into the show. Fear and fear and greed index, it is in the greed. We know that last couple of weeks it is in the fear and neutral. The market sentiment changed pretty fast from the fear to the greed. And the sector performance for the Friday, utilities and consumer staples are green, rest of all sectors are red. Sector performance for the week, energy bounced a lot, it jumped more than 3%, and financial also did good, more than 2% up. And within the sectors, only few industries did really good under real estate investment trust and other consumer services, under basic materials, precious metals, other metals and minerals. Rest of all industries did not perform well on Friday. And this Fed slashes interest rates by half a point, and aggressive start to its first easing campaign in 4 years. In my last week video, I mentioned I'm expecting 25 basis point cut. If it is more than that, it will surprise to me. On Monday, Democrats asked for 75 basis point cut, but finally Fed did 50 basis point cut. And S&P 500 performance 6 months before and 12 months after first Fed rate cut. So the red line is first Fed rate cut. If it is 25 basis points, it's a red color, and if it is a 50 basis point cut, that's a blue color. Looks like in the history, if it is a 50 basis point cut, then market went down. Let's see whether it happens this time also. And this is Kansas projecting 18% SPX earning per share growth by year 2025. The market is looking very, very good on strong side on earning per share in 2025. And this is rarely happens. The Fed is cutting into earning per share recovery. So in the past, if you see, Fed did the rate cuts when earning per share is going down, which is negative. But this is the first time, even though earning per share is going up, Fed did 50 basis point rate cut. And this S&P funded bull market looks like the current market is the red one, and looks like it is very young to any other except the 2020. And this FINRA margin depth and S&P 500 real values. The gray color is the resistance, and the blue line is the margin depth. The green one is S&P 500, and the black line is the linear margin depth. Right now, the margin depth is below the linear level. In the past, whenever it is above the S&P 500, then it had a resistance and also market dumped. But right now we are very, very under the linear level. Looks like it is good for the bulls. And this is US employment to population ratio. The blue color is overall, and the green color is full time. So the full time is going down, which is a little bit concern. I shared similar kind of chart in my 2 weeks back in my video. And this S&P 500 election cycle versus current S&P 500. So the red one is actual S&P 500 through 19, and the gray color is election year cycle for last 5 years, and blue line is election year cycles complete, and the black line is election year cycle last 10 years. All three, 5, 10, and all are going down in September and October. October is the one where it is bounced, but looks like we are going up. Let's see next 1.5 months how it is going to be, whether it follow this pattern or not. And this is financials have a solid percentage of time up for September and October, and a strong percentage of time up for November and December in presidential election years. Financials really did good in election years during September, October, and November and December. The weakest one is the information technology in September and October. They are down more than 33%, and the consumer discretionary is the weaker one in November and December months in the election year. And this September market performance, I shared this chart in my last week video. I mentioned from 916 to 930, it's a institutional portfolio restructuring like pension funds, endowments, and the hedge funds. And large traders, investors, especially pension funds, often reduce equity exposures and shift to safer assets in late September. That is called September effect. And this is a Milliman top 100 pension fund index. In July, it came 103.6%, and in August they gave it like 102.8%, which is like a less than 0.8%. Which is not a big change, but they reduced their portfolio funding in the index. Year till date is 3.3% up, which is really good. And pension funds in particular are important in rebalancing act, and when they are funded like more than 100%, means they do like risk reduction, like with strong fundamental levels, funding levels. Pension funds are increasingly focused on liability driven investing strategies, which means this approach involves reducing equity risk and immunizing liabilities against interest rate fluctuations. Means they rebalance their portfolio to make sure like the change in the interest rate don't impact their funds. And this Milliman analysis, corporate pension fund percentage sees 2024 largest monthly decline in August 2024. As I shared before, like 0.8% decline in August from July to August. It's the largest decline in this year. And this is crude oil daily chart. I shared this chart when it is in the 65, and I said it is a very, very good support level, and also futures are good on the crude oil. So right now it is at 72, very good bounce, and still the crude oil futures are pointing bullish side, and MACD is going up and RSI is going up. There is a trend line here. If it breaks, the trend line is around 73 and 74 levels. If it breaks here, then it will go up to 80 level. And these regular gasoline prices, as crude oil is going up, even though last couple of months it is going down, now there is a high chance it can go up and add the inflation. And this is dollar DXY, a monthly chart. In general, September is very bullish for the dollar, but this month it's not. And this year it is going down, it is very red. Looks like that rate cut is really bad to the dollar. Let's see where it bounces here or not. But right now the MACD and RSI and fundamentals are putting pressure on the dollar index. And this is COT index for the S&P 500, Nasdaq, Russell. S&P 500 is showing the bullish sign for the futures, but Nasdaq and Russell is going giving bearish signs, and also the Bitcoin is 100% bullish for the next couple of months. And this options referring 5.1 trillion of equities expire on 20th September. On Friday, we had triple witching. In the triple witching day, nearly 5.1 trillion equity options are expired. And SPY daily chart, on Thursday, we had a spinning top kind of candle, and it happened at the breakout level. And on Friday, we had a follow through day closing below that for Thursday level, which means it is confirmed the downtrend for me. Like I look at this, I look at the chart this way. Like whenever there is a spinning top kind of happen, for I see the follow through day is break that level or not. On Friday it did not, so looks like it is going down. If it is going down, then 560 is very good support level. On Friday we had a good volume. As I shared the chart, like options expiration day, we generally will have very high volume. But if you see Tuesday, Wednesday, and Thursday also volume going up, red volume going up, which is a negative sign. So looks like the chart is very bearish to me, and we'll see the options and the futures on this. And this is weekly chart. Weekly chart also the same. The candle is good, but not that great. MACD is going down, RSI is going down, which is a bearish sign for the SPY. And this RSP equal weighted chart for the S&P 500. I looked this one to make how the market breadth is. This is also the same. It had a shooting star kind of candle, not exactly, but that kind of candle here. MACD is flat, and RSI is also not that much great. And this is S&P 500 stocks about 20-day moving average. Right now it is at 70 level. Whenever it hits 86, that considers a sell point for me. If it comes to the 14 or 15, that's a buy point. So it looks like it is at 69. If it comes back to the 14, then very, very good for the buy point. And this is dark pool data for SPY. And we got huge dark pools on Thursday and Friday at 573 level and 568 level. If you see weekly data on dark pools last 1 year, we got nearly 20 billion dark pool data on last week, and we got similar kind of dark pools on March 15th week. So if it breaks 573 level, then it's good for the bulls. Otherwise, if it under 568 level, then it considers a sell dark pool, and it can go back to the 560 levels. And this is SPY options for the Monday GEX levels. 564 acts as a very, very good support level, and 573 is a very good resistance level. And this QQQ daily chart, again on Thursday we had a spinning top kind of candle. On Friday we had a follow through day. The gap, whatever the gap is there on Thursday, it got filled. So looks like it is very bearish to me. And also the RSI is going down. MACD is okay to me, but it looks like the upside we have a lot of resistance. I look 486 is a very good resistance level, and also 493 there is a huge gap. Looks like it made a topping here. 467 is the support I'm looking for. And this QQQ weekly chart, the chart is okay, not that great. And MACD is going down, which is bearish to me. RSI is also going down. Negative divergence with the price level, that is also bearish to me. And this QQQE equal weighted QQQ chart, again they did not break that resistance level. MACD is going down, RSI is going down, the volumes are drying up, which is very, very negative. And this is dark pool data for QQQ. We got huge dark pool on Friday and also on Thursday at 483 level and 481 level. So if it don't break that 483 or 481 level, then it can come back to the next support level is 478, and if that break, then it come back to the 474 levels. And this is GEX levels for the Monday for QQQ. So 480 is good, and if it goes up, then 485 is a good resistance level, and 475 is a very good support level. And this IWM daily chart, again on Wednesday we had a huge shooting star kind of candle, and Thursday and Friday we had an insider day kind of candles. On Friday it is a bearish engulfing candle, and looks like it is coming to the 214 level. If it breaks 224 level only, it can go up. Otherwise, 214 is very good support level. And the IWM weekly chart, the candle is okay, volume is up. We know that OPEX week we have huge volume. The MACD is pancake and RSI is negative divergence with the price. So overall, the IWM is looking bearish to me. And this is dark pool data for IWM. We got huge dark pools on Thursday and Friday at 223 level, and these dark pools are late sell dark pools. So 223, if it breaks 223, then it can go to the 226 levels. Otherwise, it can easily go to the 218. It's a very good support level in the dark pool side. And this is dark pool data for IWM for the weekly. Last 1 year, if you see, we got very huge dark pools on last week, and also we got similar kind of dark pools on July. And the IWM options for the Monday, the strong GEX levels, 280 is very good support level, and again 225 is a good resistance level. And the TLT daily chart, the rate cut did not like it by the bond market, so it came down from Wednesday, Thursday, and Friday. From Tuesday, it came down. So right now it's 98.8 level. If it goes down, the 96 acts as a very good support level. The RSI and MACD both are going down, which is a bearish signs to the TLT. And this is the futures data open interest change for ES, NQ, and RS. Sorry, RTY. So on ES we have huge open interest change on put side added at 5675 and 5685. If it market goes down, then these two can act as a good support level. And again on NQ, I did not see huge on upside, only 293 at 20,100. It's not a big number for the NQ, but in for RTY, I see there is open interest change closing the levels at 2280 and 2290, which is a bearish sign for the futures RTY. So the summary is seasonality is bearish on this week, as we saw that institutional portfolio balancing is happening, and also we saw the pension fund rebalancing thing. So that is a big thing for this next 10 days, how they're going to do, as we had a 50 basis point interest rate cut. So that impacts equity balancing in the pension funds. And also huge dark pool prints came on SPY and QQQ. Those levels are very strong, and because the dark pools are huge dark pools. If those are sell dark pools, then they can go down a lot. And COT index is bearish for Nasdaq and Russell. We saw that Nasdaq and Russell both are having bearish signs, but only S&P 500 is having the bullish on the COT index. So futures open interest changes are pointing downside for Monday. So we saw that RTY, ES, and NQ all are having bearish signals on that futures open interest change. And also charts also showing bearish signs. They made a topping on the SPY and QQQ, and also IWM had a shooting star kind of candle. So looks like the charts are bearish, option flow is bearish, and futures are bearish. COT index is bearish for Nasdaq and Russell, except S&P 500. So the COT index is not for next week. It's like future, like it can be next week or next to next week. So overall, the market sentiment or market direction, option flow, dark pools, everything is pointing to downside for the next week. Or there is a chance of go sideways where there is a option skew. That option skew is very wide, very negative, so that can make the market can go sideways. But I'm not looking anything upside right now for the next week only. I'm not seeing huge upside for the SPY QQQ and IWM. That's all for today. Hope you like this video. If you like this video, please hit the like button. Please watch more videos in my channel. If you like, please subscribe. Please hit the bell icon so that you'll get notification when I upload a new video. Please share this content if any of your friends looking similar kind of content. Thank you so much. Bye bye.